So what I have in front of us is a template I've got on the website. I'll put it in the description box. You can download it from thewhipreport.com. I see this happen often. It's every year, just as in your business, company disposes of equipment. It's figuring out how to properly record the disposal, whether it's cash proceeds or trade-in allowance. You want to make sure you've got that down correct, because the last thing you want is a year-end adjustment significantly writing down your revenue. So what this template is meant to do is help guide you through that process, and we'll go through an example here to do that, because it's so important to make sure your books are as close to final as possible come year end. Let's get into it. You're disposing your 2015 Ford F-150. Original cost of $45,000. Accumulated depreciation through the time of sale is $42,000. Net book value of $3,000. That's just simple subtraction here. $45,000 minus $42,000. Cash proceeds. We received $10,000 for that truck. Gain loss $7,000. That's the proceeds minus the net book value. That's $7,000. Let's get into the important part here, the journal entry. So when you receive the cash, you can debit cash for the $10,000 amount, increasing it, and credit the gain and loss for $10,000. Now, obviously, we just said the gain on this disposal is $7,000. That's different than this $10,000. So that needs to be adjusted. So that comes in the second entry. We credit the vehicle, thus eliminating the vehicle from assets for $45,000, which was the cost. And we debit the accumulated depreciation, which was $42,000. This is where I'm just getting these numbers from this section here. Then to balance this entry, you debit your gain and loss account. So you credited the gain loss here for $10,000, and you're debiting it for $3,000, leaving a net of $7,000. That matches this gain and loss. As you can see here, credit $10,000, debit $3,000, remaining is $7,000. You have accurately recorded the disposal of the vehicle. Okay, so let's assume in this scenario that you don't receive cash, but you receive a $10,000 trade-in allowance. So the first entry is to record $10,000 to the asset account, and you credit the gain and loss. So this, what I'm going over here, is a breakdown into two separate parts. We'll get into a summarized version, but for this purpose, we'll separate it out. So there's cash is not involved. You weren't paid cash. There's just $10,000 in value that's applied against a new purchase of, say, a 2023 Ford F-150. So you increase the asset and you credit the gain loss account. And over here, you move the old asset out and you balance, again, the same as the previous entry. Okay, so let's get into this in a further detail. So the used vehicle, same facts as the previous example. $45,000 was the cost. We had $42,000 of accumulated depreciation up until the time of the sale. Same net book value, trade-in allowance of $10,000. That leaves the gain of $7,000. Let's assume that this 2023 Ford F-150 costs $68,000. I messed that up. Don't pay attention. $68,000. What that tells us is there's two pieces here. There's the $10,000 allowance, and there's the $58,000, which is either going to be paid in cash, financed, maybe a portion of it is written down with a down payment. That just depends. But the journal entry looks very different than when cash is involved. So vehicles, credit $45,000, getting rid of the old truck. You debit $68,000. Notice we don't debit $58,000. $58,000 is the new price, right after the allowance. But there's still 10,000 in cost there. So you book the original cost, ignoring the allowance. So 68,000 debit to vehicles. You debit accumulated depreciation of the old vehicle. You credit gain and loss, which gives you the correct gain and loss, as you can see here. And then the rest, you either credit notes payable or cash, and that's just going to be the amount financed going forward. So there's more legwork in this scenario, but this happens more often than you would think. I mean, right, with the way you trade in vehicles, they may not give you cash up front, so you have to know how to record this. I hope that made sense. If it didn't, please leave a comment in the comment section, and I'll do my best to clarify it in another video.